Welcome back to our channel, where we bring you the latest and most exciting news in the world of technology. Today, we have something truly special for you, an in-depth look at one of the leading companies in the tech industry, Nvidia. So, grab your snacks, sit back, and let's dive right in. First things first, let's talk about some key financial figures that provide valuable insights into Nvidia's performance. Keep in mind that the data we're about to discuss is as of the last trailing 12 months period. Here we go! Nvidia's PRTTM, which stands for price-to-earnings ratio, is at 223.62. This ratio indicates the market's expectation for future earnings growth. Speaking of which, the PRFWD, or price-to-earnings ratio forward, is at 41.43, suggesting a more optimistic outlook for the company's future earnings potential. Moving on, we have the PG ratio, which is currently at 10.55. PG stands for price/earnings to growth ratio and is used to evaluate the trade-off between a company's price, earnings, and its expected growth rate. A value above 1 indicates that the stock may be overvalued relative to its growth prospects. Now, let's look at some key indicators of Nvidia's financial health. The return on equity stands at a solid 20.9%, indicating how effectively the company generates profits from shareholder investments. Similarly, the return on assets is at 11.3%, highlighting Nvidia's efficiency in using its assets to generate earnings. Next up, we have the earnings per share, which currently stands at $1.92. EPS is a crucial metric that represents the portion of a company's profit allocated to each outstanding share of common stock. Looking ahead, the EPS next 5 years is projected to grow at an impressive rate of 21.2%. This indicates the company's anticipated earnings growth over the next 5 years, which is a positive sign for potential investors. Now, let's talk about dividends. Nvidia's dividend yield, which measures the annual dividend payment as a percentage of the stock's current price, is at 0.04%. While this may not seem significant, it's worth noting that Nvidia primarily focuses on reinvesting its profits into further growth and innovation. And also, when we look at dividend growth over the last 10 years, we can see that it has grown at an average annual rate of 11%. When it comes to profitability, Nvidia is no stranger to success. The operating margin, which represents the percentage of revenue left after covering operating expenses, is at a healthy 17.4%. Additionally, the profit margin, which reveals the portion of each dollar of revenue that results in profit, is at an impressive 18.5%. Now, let's take a look at Nvidia's performance over the past 5 years. The evolution of profits and income during this period has been very positive, showcasing the company's ability to consistently grow and generate higher earnings. This has allowed it to obtain a total return 10 times greater than the S&P 500 in the last 5 years, which means that if 5 years ago you had invested $1,000 in Nvidia, now it would be worth $5,921, while if you had invested it in the S&P 500 it would be $1,590. It's not bad, right? Another exciting figure to highlight is the average price return of the last 52 weeks, which stands at a staggering 163%. This indicates the percentage gain or loss an investor would have experienced if they bought Nvidia stock 1 year ago and sold it today. Needless to say, Nvidia has been on fire. Lastly, let's talk about Nvidia's market cap, which currently stands at a jaw-dropping $1.06 trillion. Market cap represents the total value of a company's outstanding shares of stock and is an indicator of its size and overall worth in the market. Wow! That was a whirlwind of financial information, but I hope you now have a better understanding of Nvidia's performance and potential. Remember, always do your own research before making any investment decisions. That's it for today's video, folks. If you found this information helpful and enjoyed the video, don't forget to hit that like button and subscribe to our channel for more exciting content like this. Also, let us know in the comments below which other companies you'd like us to cover in future videos. Until next time, stay curious and keep exploring the world of technology.